Hello, everyone, and welcome to the Don't Risk It podcast presented by VFIS Client Risk Solutions. This program focuses on the exposures our clients frequently encounter and discusses some potential solutions to help reduce these exposures. I'm your host, Chris Rodgers with VFIS Client Risk Solutions, and today we're discussing the concept of agreed value and how it applies to our client base. I want to welcome Peter Feid to the program. Peter is a sales executive with a VFIS program, and he has territory in the Mid-Atlantic states. Peter is here to clear up some of the confusion in regards to agreed value and provide us with a better understanding of the concept. Peter, I want to thank you for joining us today. How are you doing?
Hi, Chris. I'm doing great. Thanks for having me on today.
Absolutely. So how would you best describe the concept of agreed value?
In terms of agreed value, it's one of the topics, how we insure fire and EMS vehicles. It comes up so often with our risk, with our client risk solutions representatives, when they're out interacting with our clients, when VFIS sales executives are out working with brokers and visiting clients, when we're at conferences and trade shows. It always comes up about what's the best way to insure an emergency vehicle and how does this coverage actually work? So it's great that this is the topic today because we can hopefully shed some light on how the form, what the intent is of the form, and how emergency service organizations can best plan for the proper values for all their apparatus. In simple terms, agreed value is the term that VFIS uses. It's an insurance form attached to the auto policy that provides physical damage for fire and EMS vehicles. So it's the physical damage component, and agreed value actually dates back decades when they were looking for the best coverage to try to cover collector vehicles, antique autos, and the private passenger type coverage under personal auto and commercial auto policies really didn't meet the need. So decades ago, VFIS also adopted the agreed value concept and came up with a form that meets the needs for their emergency services clients to best provide the physical damage coverage for fire and EMS vehicles. They're high value, well maintained, special use. So this type of form really does well. And the advantage of agreed value is that it takes all the downsides of the regular auto policy terms. There's no coinsurance, there's no depreciation, there's no actual cash value, no betterment penalties. All those terms come into play on the regular auto policy, but the agreed value form is a whole different approach, and it allows the client to pick a value for each of their vehicles and know that that's what the vehicle is insured for. And as we move through the conversation today, we can explain to you how that works. But it really takes a lot of the guesswork out and some of the downsides of how the typical auto policy works for physical damage.
So you mentioned that, clients picking a value or coming to a value. What are some factors our clients should consider when they're deciding on an agreed value?
Well, it's not an easy task. Trying to come up with what value to insure a fire or EMS vehicle for. It's time consuming. It takes a lot of forward thinking about planning, vehicle rotation, fleet management. So VFIS has come up with some suggestions that our clients can kind of use as a framework. And really what it boils down to is looking at your fleet and taking each individual vehicle and doing an assessment and trying to determine a low-end value and a high-end value for that particular vehicle. The low end would be the possible actual cash value or the market value if that vehicle is to be sold today, if they were to try to sell it. And the high end would be what it would cost to replace that vehicle today with a brand new vehicle of similar specifications. So once you've established that low end and that high end range for each vehicle, the apparatus purchasing committee or the board or whoever's looking at these values that they want to determine on the vehicle would start to ask themselves several questions. There's a process you go through. What would you do in the event that that vehicle was damaged beyond repair? If the vehicle is damaged beyond repair, what is the goal? And so you run through that hypothetical situation. And the first question will be, if you had an older vehicle or one that's a few years already in service, do you want to replace it with a vehicle of similar age and specifications? If that's the case, then you would kind of look at the lower end of that agreed value range that you've set. It's kind of a methodical process, but it really takes some discipline to put together, the values that you want to insure them for. And it takes this type of a process. So again, if you're looking to replace it with something of similar age and functionality, then you could go on the lower end and use that as your agreed value, and that will be on the policy for the physical damage. If you're looking to replace that vehicle with a newer used vehicle, so you can get some longer service life out of that apparatus, but you might not have the budget resources to go out and buy brand new, then you might want to look somewhere in the middle of that range of the low end and the high end for the agreed value. If you decide that you really want to put a new vehicle in service, brand new, and go through that process, then you look at the very high end of that agreed value and use that as the value you want to insure the vehicle for. It's really up to each department or EMS agency to determine what their goals are for each particular vehicle, and start to try to look at the and look at the range and choose the best value that would make sense for them at that time.
So just to clarify something that you said, VFIS will offer suggestions, but it's ultimately up to the client to decide those values. That's not something that we're going to decide.
That's a great point. We do, everybody's always looking for someone to help them come up with an agreed value. And that's, again, by looking at this process, you can see that each fire or EMS agency is going to have their own unique situation. They may have vehicles that are custom for their particular community and exposures, and some might be buying some commercial vehicles on a commercial chassis. So each department has its own needs, unique circumstances. It's hard for anybody outside of their organization to tell them what the value should be. The great news is there's so much information out there, the industry publications that we all look at, the conferences we go to, the manufacturers, the dealers. There's a lot of resources to help an organization kind of vet through this process and find out within a reasonably close range what their vehicle is worth, what it would cost to go out and replace it, whether it's new or looking at the used apparatus, an ambulance. There's so many websites and organizations now that are selling used vehicles, and the surface records and the service life is well documented, so they can be sure that they're getting a used vehicle that's going to meet their needs.
So let's say that our client has came to a decision and they found an agreed value that they're comfortable with. How do we manage their expectations of how that value will be applied in the event of a loss?
Well, that's a great question. Again, as you've gone through the process of coming up with an agreed value for your vehicle, and now we want to manage those expectations and know how the policy is going to perform in the event there's a claim. So, I'll kind of go verbatim a little bit looking at the way the form is written. VFIS has its own unique form that they've been using for years, and it gets updated based on, changes in the industry. But the most important thing is to recognize how the policy is going to perform paying a physical damage claim. And there's a range. You could have a small loss that's a quick, easy fix, or you could have a significant claim where it's much more involved and you've got a heavy equipment adjuster and specialists in the fire service or EMS side looking at that vehicle. So we'll take a few minutes and kind of just walk through how the form works, because that's really important. And again, today it's really just to kind of touch on it. The most important thing is to sit down with an insurance agent that's familiar with our forms, or speak with the VFIS team and make sure you really have a understanding how the form's going to perform, the policy is going to perform when you have a claim. But to start, the policy says that in the event of a loss, the VFIS physical damage form will pay the least of the following. And then there's 4 criteria that we'll walk through. The first is the cost to repair the damaged property. Straightforward, small claim, fender bender, side mirror gets knocked off. Fairly simple claim. Vehicle is not out of service or just for a day or so. It's fixed, it's put back in service, and the cost of that repair work is taken care of. Next, you have a claim that's a little bit more involved. So then you move into the process where there's got to be some parts that are replaced. And the goal is to use new parts if they're available, parts of like kind and quality without any deduction for depreciation. We talked about one of the advantages of agreed value is there's no depreciation or actual cash value. Those terms don't apply. So the good news is in a partial loss where there's work to be done and parts to be replaced, it might extend the service life part of that vehicle because you've got new or fabricated parts. If it's an older vehicle and those parts aren't readily available, we'll be able to fabricate them and the vehicle will be back in service better than it was in that particular section. So that's the next level claim. Then you move into the next category where you've got much more damage and you've got a high value claim and you're entering into the area where the policy says that it's going to pay the cost to replace the entire covered auto and its permanently attached equipment with a comparable new auto and the permanently attached equipment. So in this case, by way of example, say you've got an engine that's insured for $500,000 and it's significantly damaged, and they can go out and replace that vehicle with a comparable one for $480,000. Again, just by way of example, the VFIS agreed value form would pay the $480,000, and the insured is agreeing that vehicle is comparable. It's got the same specifications and functionality, and rather than pay the $500,000, they're going to pay the $480,000 and make them whole, and they'll have the vehicle in service that meets their needs. Is comparable to the one that was damaged beyond repair. And the fourth category in the policy says that, again, the agreed value stated in your policy declarations as applicable to the damaged or stolen property. So in this case here, you've got a significant loss. It exceeds the $500,000 that you had the vehicle insured for. It could have been because of inflation, other factors that, the cost is greater than $500,000. The policy would pay the $500,000 agreed value. So there's those four criteria that you walk through when you try to manage your expectations of how the policy performs.
So Peter, you just mentioned inflation, so I kind of want to circle back to that. I'm going to use a term that we're all fatigued of. It's supply chain. How has the supply chain difficulties impacted our clients when they're determining agreed values?
It's amazing how much it's had a huge impact. I mean, there's not a day that goes by that you're looking at the industry publications or hearing stories from clients where the cost of equipment and apparatus has gone up significantly. The lead time to go out to look for funds and make a purchase on an apparatus or a vehicle, it's now 2 years out or more to take delivery. And so you'll read in the publications, you'll see on social media posts from the industry publications that a lot of organizations are struggling now to budget for a vehicle they may not take possession of maybe 2 years out. And so it has had a huge impact. And there's been several stories we've heard through attending the annual conferences where fire department may have purchased a commercial chassis and that's part of their new vehicle. They're waiting to take delivery, and that cost of that chassis has gone up twice since COVID hit, and they've been waiting to take delivery. And depending on their purchase agreement, that was an expense they didn't expect, but that's just what's happening with the inflation and supply chain challenges. What is your feedback?
Peter, I agree with your comments 100%, but I also want to go to Mike Baker. He's joining us in the room today. So, Mike, do you have any comments on the question?
In the industry, I've seen some, and I'll go even to the smaller side vehicles, the ambulances and so forth, where they'll, from an agreed value standpoint, they'll be what we would consider a total loss or a replacement. But due to the lag time and being able to get a replacement vehicle, those organizations are actually buying the salvage back and then repairing them at an excess cost over the agreed value just so they can get a vehicle in their fleet because they just can't get a replacement vehicle at the given time.
Now, that's great points, Mike. Very important points. one thing we would need to revisit, I guess, and when you're looking at the way the agreed value form works, is there something we were discussing before we actually came on to do the podcast, is that there's a clause in the form that's for VFIS that says it's called a 75% threshold. And again, that's when you're working through the physical damage part of settling a claim. The one thing you need to, as an organization, when you're choosing an agreed value, is recognize what happens when you choose a value that's significantly high or very low. And the form, VFIS risk control solutions, and overall on the VFIS website, there's a great document that was created to kind of give some layman's terms on how this works. And if you go to the VFIS.com website and you type in agreed value in the search engine, you'll see the form we're referring to, but it gives some good examples. And what's important to remember is that 75% clause comes into play when the damage to the vehicle that's insured doesn't, well, the two scenarios. One, it's below the 75% clause. So let's just say, by way of example, you've got a $500,000 apparatus, and that 75% clause, really that threshold is $375,000. So you can do a lot of repairs with $375,000 on a vehicle before it hits that 75% threshold. When we went through the coverage terms, the second two parts, where they're going to replace the vehicle with a comparable auto or pay the agreed value, the amount of the damages actually has to exceed that 75% threshold. And that 75% is of the agreed value that the insured chooses. So that's one of the things that takes a little bit of time to walk through and understand when you're looking at how the policy works, is making sure that agreed value, you understand how it's going to perform, so that if you have a really high agreed value, that there's a lot of work that can be done to put that vehicle back in service before they start looking at possibly replacing it with a comparable vehicle. And on the flip side, if that agreed value is too low, it may work against you as an organization, because if you've got a vehicle that you're putting an agreed value on for $100,000, let's just say you think it might be, you could sell it for $200,000, but for whatever reason, $100,000 is the agreed value. It's been insured that for a number of years, and now you have some damage to that, only $75,000 of damage. That adds up pretty quickly, that you get to that 75% threshold of $100,000. So now you've got $75,000 worth of damage to a vehicle insured for $100,000, but it actually is got a $200,000 market value out there. So to go out and replace it, you're going to have to find the additional funds. So you don't want to be too low on the agreed value, because it could work against you as an organization if you have a large loss that gets close to that 75% threshold.
So, Peter, you mentioned claims a couple of questions ago. You kind of walked through the claims process, but I kind of wanted to round out the conversation, circling back to that, because we're an insurance company. We're in the business of paying claims. So how is the claims process different when using agreed value versus actual cash value or replacement cost? Okay,
great question. When you look at the claims process, basically the initial point of loss, that's everything's the same. You notify your insurance agent. There's a loss report submitted. It gets to the claims department. They get right on it, and they determine, what level of urgency there is. Is the vehicle out of service? Is there bodily injury? And then they start looking at getting the claim adjusted. When it's a straightforward claim, small amount of damage, they can deal with a dealer or body shop. That's one branch of the claim. Fairly straightforward. The same process takes place until you get to a larger loss on the agreed value, and that's where they may bring in the heavy equipment adjusters, some specialists in fire or EMS vehicles. So the process is the same. It's just who's going to get involved as the claim gets a little bit more significant. In terms of, you mentioned the term actual cash value and replacement costs. It's interesting because a lot of these terms are used just because there's acronyms in the insurance industry. Again, actual cash value is a whole separate topic than the agreed value form. Replacement cost is used because a lot of just people in the fire and EMS industry don't realize that that's not an actual a form that is a replacement cost form. Everyone's looking to get they want to share it for replacement costs. Well, what that would mean is that you want to choose an agreed value that's close to the cost of purchasing a new vehicle of similar specifications.
So, Peter, we'll get you out of here on this one. How often should our insureds revisit and set these values on the policy? Do they just set it one time and let it go, or again, how often should we take a look at these?
Great question. Again, that's something that really every agency should try to do on an annual basis. It's something you sit down with your insurance agent, take a look at what's happening internally and as well as externally. Now with the supply chain issues and the backlog of getting a new vehicle in service from day of purchasing to the day you actually take delivery, the cost of everything going up, it's something you should, this is a process you should go through on an annual basis. It kind of, once you get the heavy lifting done, we're trying to determine your agreed values by looking at the low end and the high end, and you have a goal for each of those vehicles, what your outcome is going to be in terms of vehicle rotation. There's not a lot of work done after the heavy work has been done, putting together an assessment of your fleet. But it definitely should be looked at each year. Make sure those vehicle values can be adjusted. There could be a possibility you may want to look at the deductibles in different ways to control the cost of insurance. But annually and at any time, all of the VFIS staff are available to answer questions with our insurers as well as our brokers.
Well, Peter, it was excellent having you on today. It was a lot of great information on a topic that I think that it hasn't been covered very well, and I think you gave our listeners a lot of great information. So again, I want to thank you.
All right. Thank you for having me, Chris.
Absolutely. And I want to thank you for listening to the program today and for your interest in VFIS safety resources. I want to thank our guest, Peter Feid, once again for his time and information. Please consider subscribing to our program to stay up to date on new content releases. Also, if you like what you've heard today, please consider leaving a review below. For more information about the many resources available from VFIS, please visit VFIS.com. And to submit ideas for future discussions, please reach out by email at VFISriskcontrol@VFIS.com. Thanks, everyone, and have a great day. The views, information, or opinions expressed during this program are solely those of the individuals involved and do not necessarily represent those of Gladfelter Insurance Group, VFIS, and its employees.